What's up everybody, welcome to the Stocks channel. My name is Cory and today we did get the CPI data and the stock market is now approaching very critical bear market resistance. Will the bulls have what it takes to defeat the big bad bear? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we will be starting on the weekly chart of SPY because I want you to pay attention to how close we are getting to the bear market resistance trend line, which is just above around SPY 399 to 400. This has been the resistance trend line that defines this bear market, and this weekly candle is going to close by the end of day tomorrow. So we are going to see if we're going to get this bullish pivot from this support zone around SPY 380. If this weekly candle closes in the green and we close near this resistance, we are very likely going to see an attempt for the bulls to try to break out of the bear market resistance trend line, which does mean we could go into a bull rally. So this is going to be very critical resistance, and if you've been waiting to short this market, this is the best time to try to do so because this is going to be your best risk reward setup. This is where I consider the big bad bear that has been very patient and waiting to short this market for the right opportunity. That is going to be this bear market resistance trend line. So if you've been patient and you've been waiting for an opportunity to short this market, I do believe this is going to be your chance to do so, because once we break out of this bear market resistance trend line, you instantly know you're wrong, and then you can cover your short position for a very small loss because you'll know we're getting the bull breakout and there's no point in any longer shorting the market because we're going to likely continue to go higher. So this is going to be the time to do that, so pay attention to this very critical resistance level. So jumping back over to the daily chart of SPY, we can see that we did close just below the negatively sloping 200 daily moving average, which is also going to be a very strong resistance from the daily chart. And I do think with the gap being filled to the upside, there's a very good chance we get rejected from this resistance zone and go fill the gap to the downside. So for that reason, I'm expecting to see SPY pull back over the next few days and come down to fill this gap just above 390. That's going to be critical support now because that's the critical resistance the bulls had to break above, and they are now going to turn that level into a support level as they build up energy and rest, getting ready to battle the big bad bear, which is going to be at higher prices. So even if you are bullish on this market, you need to understand that nothing goes up in a straight line forever, and there is a very good chance the bulls need to rest before they try to battle the big bad bear. So we are very likely going to see a pullback in the very near term before we go battle the big bad bear and try to break out of this bear market resistance trend line. So yes, this could be a bullish low volume pullback just simply to cool down the technicals before we go any higher. So I am expecting to see lower prices over the coming days if we cannot break above this 200 daily moving average. And even if we do break above it, there's going to be even stronger resistance just above between 399 and 400. Now, as soon as we break above that bear market resistance, we're very likely going to start running all the way back up towards SPY 408 and then 414. But again, this is going to be very, very strong resistance that will not easily be broken unless we get some type of extremely bullish catalyst. So I am expecting to see a retest of strong support between 390 and 389, and if we break below that, we'll likely come down to about 385 to 382. So there will be plenty of support for the bulls to work with. So if you're going to get bearish, you need to be doing it up here at the higher prices. That way you have a great risk reward setup. On the NASDAQ 100 triple Qs, we were up 0.54% today, and the triple Qs got the second day in a row closing back over the 50 EMA, but we are getting very close to the very critical resistance around 280. Above 280, we still have a gap to fill at 283, but if we get rejected from 280, there's a very good chance we come down and fill the gap just below 273. So just like SPY, I think there is a good opportunity to short the triple Qs right here at this risk level, knowing you need to cover if we start breaking above the bear market resistance trend line or this resistance level right around 280. So to the upside, look for resistance at 280, the gap fill at 283, and the bear market resistance trend line at 288. And to the downside, you're watching for support at 276, 273, and between 268 and 270. On the Dow Jones, we were up 0.66% today, and the Dow Jones hit our double bottom price target of 341, and we did close $1 higher. So it does look possible that the Dow Jones could try to push to 346 and then 350. But pay attention to the daily Bollinger Bands and you can see that we're getting a little too far overextended. So there is the possibility that Dow Jones could pull back between 336 and 334 before finding support and continuing to climb higher. So watch that critical support level to the downside, and the critical resistance will be just above at 346. And do keep in mind we are getting a little outside that upper Bollinger Band. On the Russell 2000 IWM ETF, we were up 1.68% today, and we did get the confirmation of the second day in a row back over the bear market critical resistance at 182, which means we could be well on our way to 188. However, there's no guarantee we need to go there in a straight line, and we are way outside the upper Bollinger Band, so there's a very good chance the small caps may cool down and retest the breakout at 182 before going any higher. So manage your risk as bulls at 182 and this gap fill zone right around 180, and below that you have critical support down here at 178. If we continue higher, the strong resistance at 188 is likely going to contain the buying pressure, but if we do break out above that, we're likely running to 195. On the ARKK ETF, we were up 2.1% today, and ARKK has the second day in a row back over the 50 EMA, so we are very likely going to continue climbing towards the next resistance level right around 38, and then above that will likely run up to 40. Critical support for the ARKK ETF will be down here right around 34.5, because if we break that, we're coming all the way back down to 32.5, and then the gap fill at 31.68. On the VIX, we were down 10.67% today as the VIX got absolutely obliterated, and it's way outside the lower Bollinger Band, breaking down through that critical support zone around 20. Now keep in mind, in the bear market, the VIX below 20 has been the great opportunity to short the market, but typically speaking, VIX below 20 is more in line with the low fear that you see in a bull market. So with the VIX below 20, there is the possibility bears are going to step in and take advantage of the low volatility and try to buy cheap put options, but that doesn't guarantee the market has to go lower. If the bulls continue to push and break through resistance, we will see the VIX continuing to trend down towards 18, and then we could continue into a sustainable bull rally. On Bitcoin, we're currently up about 5% on high volume buying, and we did get that bull breakout yesterday above 17,800, and I told you above that, look for the next price target up here at the strong resistance at 19,000. And here we are on high volume buying, reaching that price target in just one day later. Above 19,000, we still have resistance at the negatively sloping 200 daily moving average at 19,500. And then above that, we will see Bitcoin at $20,000 yet again. Now, if we get rejected from this resistance, it is possible we do get a retest of the breakout at 17,800, but this is very high volume buying, so don't necessarily expect a rejection. Wait for the confirmation with multiple candles closing below resistance. On Amazon stock, we're up 0.19% today, and Amazon is just getting way too far extended outside that upper Bollinger Band, and we did run into some critical resistance around 97 and started to pull back. We're still above the breakout of the resistance trend line, and that level is now acting as support, so you can stay bullish in Amazon as long as it's above 93, but you have to keep in mind if we break below that support, we are very easily coming down to fill the gap at 90, and then below 90, we could come down and fill the gap at 86. So you can stay bullish as long as we're above 93, but then below that, you need to be expecting lower prices. And if we get the bull breakout above 97, we'll be looking for the next run up to about 102. On Microsoft stock, we're up 1.16% today, and Microsoft did fill the gap to the upside just above 237 and did test critical resistance at the 50 EMA at 240. If you're wanting to be a Microsoft bear, you want to short between 240 and 242 because there is a possibility we get rejected from this resistance zone and come all the way back down to fill the gap around 225. Below 225, we can retest 222, and below 222, we can come down to 214. But as soon as we start breaking through the resistance at 242, that is going to look like a bull breakout that can bring us all the way back up to 252. On Nvidia stock, we were up 3.19% today, and Nvidia is continuing to bounce off of that strong support, which was the resistance breakout above 156, and then we did get the breakout above the resistance trend line at 160, and above that, we were looking for a run up to 166, which is exactly what we saw today. From here, this is going to be the strong resistance at 166, which is also our negatively sloping 200 daily moving average. So there is the possibility we will get a pullback from this resistance. If we get the pullback, we're likely coming back down to 160 or 156, but there will likely be buyers at those support levels. And to the upside, if we break through the resistance between 166 and 167, we will be looking for the gap fill at 174. On Tesla stock, we were up 0.28% today, and Tesla continues to see another very high volume buying day, but we are at very strong resistance right around 123. It is going to take a break above this resistance to get the short squeeze, which should easily send us up to 138 and then 155. You also have to keep in mind we have the negatively sloping 20 daily moving average of resistance, so I do expect to see resistance between 126 and 128. So if we do get the breakout, you want to use your risk level for the longs right here, right around 123, because if we break 123, there is still the possibility we come down to fill the gap at 114.39. The weekly critical support is still 107, so there is the possibility we're just putting in a bottom and getting ready to turn that corner before we continue to head higher. And I do still think this was capitulation in Tesla. so I would not be surprised if we get that V-shaped recovery and get to 155 in a hurry. On Apple stock, we were down 0.06% today, and Apple has the second day in a row back over the 20 daily moving average, so we are getting more and more evidence that Apple is trying to break out, so you can stay long in Apple while it's above 130 to 131. The next critical resistance will be 135, and then the resistance trend line right around 138. And if we could break through the resistance trend line, we could see the end of the bear market in Apple stock. However, we still have an outstanding price target on the weekly chart down here at 122. So there is still the possibility we could get rejected from any of this resistance and still make another leg lower. So you want to manage your risk right here around the support between 130 and 131, because below that we're likely coming down to 122 with support on the way there at 125 and 126. On the financials, we're up 0.2% today, and the financials continue to look bullish with the price action and trend, even though we are getting very close to some critical resistance. The industrials were up 0.59% today, getting that bull breakout above the previous daily closing high, but we are getting close to the previous intraday high, so you do want to look for resistance right around 103. We have the bull trend and the bullish price action. The healthcare sector was down 0.32% today, still closing above critical support at 134, but still below a negatively sloping 20 daily moving average. The energy sector was up 1.91% today, and we did get the bull breakout above the resistance at 88.6, which means we could make a run up to about 92, and we are building up a bull trend. So jumping back over to the S&P 500, in the short term, we are testing very critical bear market resistance, so there is the possibility we are going to see a pullback in the near term. That doesn't guarantee the bear market is resuming, because the bulls are likely cooling down before they make an attempt at defeating the big bad bear. So you don't want to get overly bearish over the next few days just because we get a pullback. If we see support holding up and we get buyers back into the market yet again, we are going to eventually see that test around SPY 400, and then we will see if the bulls can defeat the bear once and for all, or if the bear is going to continue to dominate this market. So be disciplined and let the price action do all of the talking. And if we do get the bull breakout with the price action, you instantly need to get a lot more bullish, because we could go on a very face-ripping rally. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us over at the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.